Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel here on YouTube. Happy New Year! Let's dive into the video about the 4-year cycle for Bitcoin. 4-year cycles comprise of 4 12-month candles. So each candle is a year, and you can see this sort of cycle repeat. And we're essentially beginning a new era in this 4-year cycle. This is now candle 3. 2023 is the candle 3, and we're going to be talking about some really cool technical principles that seem to be recurring throughout time, always rhyming with history in some way, never truly repeating it copy paste, but there is definitely a lot of historical tendencies that are worth noting and that can help us in our investing when it comes to Bitcoin, and as well as the broader market, because Bitcoin leads and then altcoins follow. So really important to pinpoint these specific stages in the 4-year cycle. So let's dive into the video. Hit the subscribe button if you haven't, and of course like this video if you like it, and if you'd like to see more videos like this in the future. So last year, very late last year, 2022, December 29th, I plotted out the candle 3 and candle 4 because the candle 3 here is going to be the bottoming out candle, and we can see that this candle 3 in 2019 and the candle 3 in 2015, well, they open at the close of the bear market candle, right? So you can see this repeat, and this is just technical fundamentals here. Wherever the previous yearly candle closes, the new one is going to open. But the reason I mention this very basic technical principle is that we tend to see downside wicking below the open of candle 3, and we tend to see downside wicks more volatile, such as in 2015, very volatile to the downside, and sometimes less volatile. So one of the first principles to bear in mind, well, the first two principles are wherever candle 3 begins, the bottom for Bitcoin is not too far away. And we've seen this in previous candle 3s, and this 2019 candle 3 was, it printed a minus 10% downside wick, so very close to the final bottom. And we'll be talking about this 2015 wick in a moment as well. This is a 50% wick, so definitely different market conditions at that time in 2015, but nonetheless, this has to be still figuring in our analysis. So wherever candle 3 opens, the bottom is not too far away. The second principle is, of course, these downside wicks. Generally, candle 3 is the bottoming out candle, and it's important to bear that in mind because it sets up a candle 4, which is a trend reversal candle. But nonetheless, really important to notice that the bottom of candle 3 tends to form, or at least in this cycle it's forming on top of a multi-year resistance. So candle 1, 2, 3, this was a 3-year resistance rejecting price, the 14k level, essentially speaking. This was a 3-year resistance broken by this candle 4 in 2020, and now candle 3 and candle 2 are very close to solidifying a bottom at this multi-year resistance, potentially trying to turn it into a multi-year support. And of course, previously we've seen, for instance, this multi-year resistance turn into a support in candle 1. Of course, we didn't get that. In the same way, we never really saw candle 2 and candle 3 drop into this 4-year cycle resistance, as we are seeing right now. But nonetheless, multi-year cycle resistance, multi-year cycle support. That's what we might be seeing going forward. So now that we know that candle 3 has closed around the 16k region, a minus 10% or minus 52% wick could occur. Of course, 10% being more likely than the 52%, but nonetheless still worth factoring into analysis, because candle 3, a downside wick from candle 3, would see price return to the 14k region, so to that multi-year resistance for a support test. That would essentially be a support retest. And a 50% drop, as per 2015 retracement tendencies, that would see an 8K Bitcoin getting very close to the top of candle 3. But that's not what happens in a candle bottoming out candle. Candle 4 is a candle that turns the top of candle 3 into a new support. And apologies about the works going on as well if you hear some construction noises. But in any case, candle 3 top as a support, and of course downside wicking. And the same here. Candle 3 top retested as a candle 4 and downside wicking. And what's interesting about this wicking here in candle 4 is that this downside wick is a higher low to candle 3, of course, in the same way that this downside wick is a higher low to the candle bodied bottom. So the candle bodied bottom represents a higher low, but we almost get tagged in that candle 4 with a downside wick. We almost get tagged. The candle bodied bottom almost gets tagged with a candle 4 downside wick. So because we've closed here, and let me just cycle to the first chart, which has this fresh candle bottom here, then candle 4 forming somewhere like this, a downside wick into that 16,700 level could occur. It wouldn't actually touch the candle bodied bottom, as you can see here. This wick is very much far away from the candle body bottom in the same way it is here, but that's like a 10% difference. So a candle 4 next year, 2024, we could see a downside wick into, let's say, 18,000. So just above that candled bodied bottom of candle 3, but never actually really truly retesting it. Let's say candle 3 forms like this at the end of 2023, then the top of this candle 3 would be retested by candle 4 with some downside wicking also. So really does depend how does this candle 3 form this year, but some cool tendencies. In any case, really important to just focus on this higher low, because here, this higher low, for instance, was where candle 4 almost tapped into. So if we see a higher low form like this in candle 3 as well, that would be quite interesting to see, and then have that follow through in candle 4. So this higher low tendency, something to bear in mind, something we also spoke about just a moment ago. In any case, how much upside could candle 3 show us? So 234% to the upside is what we saw in 2015. 316% to the upside is what we saw in 2019 in the candle 3. So if we were to just try and understand what sort of measurements, what sort of upside this current candle 4 or candle 3, apologies, could showcase to us, well, a 180% rally from current prices would see Bitcoin revisit the current 4-year cycle resistance at around 50k. So that's happened in 2019, and that's the most that candle 3 could go. So it's all about reaffirming that old 4-year cycle resistance. That's the most that we could see, because we don't tend to see candle 3 deviate beyond this point. So a 180% rally would be the most that candle 3 could show us this year. That's the best case scenario in my opinion, based on what we've seen in the past. Because remember, here we've seen an upside wick into that 4-year cycle resistance that was 13,900 in 2019. And could we see the same thing happen this year? That would be the best case scenario, 180% to around 50k. Best case scenario, something to bear in mind. And repeating a 2015 rally in the form of a 234% move, that would see a revisit of 55k, which is above this 4-year cycle resistance, so a little less likely. And a repeat of 2019 figures, 316%, that would see us revisit the old all-time highs for Bitcoin, so around 68, 69k. So that doesn't tend to happen until candle 4. And even in candle 4 here, we didn't see a revisit of the old all-time highs, but we got that in 2020. So just based from this chart, we will see a new all-time high for Bitcoin, and as early as 2024, should we see an overextended candle fall like in 2020 occur in 2024, and at the latest it would be in the next candle one, which is in 2025. And we see that 2021 is where we had that next candle one form, where we see a bull market peak, new all-time highs yet again. But typically in this cycle, for instance, we only saw new all-time highs in the next candle one. So it's very difficult to say if we see a new all-time high form in candle 4 in 2024, just like in 2020, or if we see a new all-time high form in the new candle 1, just like in this cycle. So that remains to be seen, but at the soonest 2024, at the latest 2025, which is after the Bitcoin halving. And of course, Bitcoin tends to rally most exponentially after the Bitcoin halving. So that's something to bear in mind. In any case, really interesting to see that we are entering a new era in this 4-year cycle, and it remains to be seen how big of a candle 3 Bitcoin could muster, whether it's going to be a repeat of around the 2019 candle bodied, seeing us go to below 40,000, or if we're going to see a narrower candle body form here, just like in 2015. So that would see price go to around 30k. In any case, decent upside is very much possible. But the most important thing to note is that the bottoming out process is already underway. It just is a matter of time, or rather a matter of finding out, really. Are we going to get that downside wick? Is it going to be a long downside wick or a small downside wick? And historically, if we just look at the charts on the weekly time frame, from January to October is where Bitcoin was actually below the candle-bodied bottom of candle 3. So essentially, this downside wick constituted around 10 months worth of price action. From January to October, Bitcoin was below this price, the candle-bodied bottom of candle 3. So for 10 months, this downside wick was essentially, this is where price was. Whereas here in this downside wick, Bitcoin was consolidating in this downside wick from January to February. So in other words, Bitcoin was from January to February the price of Bitcoin was located in this downside wick. So you can see that whether it's from January to February or January to October, we can see that if history repeats, Bitcoin would spend below 16,000. It could spend at least a few weeks below 16,000, and that would be the downside wick of this candle 3. That remains to be seen, but a principle worth noting nonetheless. So this is what the remainder of the 4-year cycle could look like. Of course, we're seeing the formation of candle 3 already. Candle 4 would see Bitcoin really challenge for these highs. As we've seen before, this 4-year cycle resistance is finally broken in candle 4. We've seen that in 2020 as well. So in this cycle, we could see 50k in 2024, probably in the later half of 2024, candle 4 breaking beyond that, and then a new candle 1 forming to new all-time highs. However, whether it's a longer one or a shorter one, diminishing returns seem to be here at play. As you can see, if we just measure this very crudely, you can see that there are diminishing returns in candle 1s. So could we see something like this or like this? Remains to be seen, but these are some of the historical tendencies worth paying attention to. In any case, guys, this is content that I go into a lot of detail. Essentially, these are sort of the research pieces that I produce for the Rekt Capital newsletter. Feel free to sign up for that. It's a great resource to just tune into 3 times a week, every Monday, Wednesday, and Friday. bull market or bear market, really beneficial to just sign up and check out the content there. Lots of useful stuff. In any case, if you'd like me to post more videos like this in the future, feel free to subscribe and of course leave a like. And if you have some thoughts about the 4-year cycle, feel free to post a comment down below. In any case, guys, that's about it for today's video. I'm Rekt Capital. Thanks so much for watching, and I'll speak to you in the next one. Speak to you soon.